All right, ladies and gentlemen, joining me on stage are our panelists for the session, Global Commerce, Local Ease, Fintechs Redefining Merchant Payments. We have on stage with us Mr. Christophe Mariette, co-founder and chairman Lyra India, Lyra Network. Mr. Lee Zi Xian, CEO of Country Head Razorpay. Ms. Lisa Nyman, Chief Revenue Officer, Pay10. Mr. Jayant Kulkarni, Global Head of Merchant Services, HSBC. And the session is going to be moderated by Ms. Arti Singh, founder and editor of The Head and Tail. Ladies and gentlemen, before I hand over the further proceedings of this session to our moderator, during this session, you will also have the opportunity to ask questions to our speakers. Our moderator will be selecting questions from the audience. All you have to do to submit your question is open the Global Fintech Fest app and go to the Agenda tab. Select the session you are attending, scroll down and tap on the live Q&A button, type in your question and it will reach the moderator directly. We encourage you to participate and question could be the next one answered on stage. Also, request you to kindly explore GFF GPT feature on the app. It can instantly answer all your questions about the Global Fintech Fest, from sessions and speakers to schedules and side events. A gentle reminder to please keep your questions respectful and free of any inappropriate or offensive language to ensure a positive and engaging experience for everyone. And now I'll hand over the further proceedings to our moderator. Ms. Arti, over to you.
Thank you so much. I think in a hush-hush, I think she named each one of us, but nobody knows who are we. So maybe we can just take 2 minutes time and introduce ourselves. I am Arti Singh, and I am founder and editor at The Head and Tail. It's a fintech-focused media publication. I run it independent since last 1 year.
It's on? Yeah, it's on. Okay, hi everybody, thanks for being there. I am Christophe Mariette, the president of Lyra India and the global director of business of the group Lyra. Maybe you have heard Lyra because we have brought this great payment method, UPI, in Europe. Now, if you are traveling in France, you can pay your Eiffel ticket with UPI. You can do make shopping in Galeries Lafayette with UPI. And tomorrow, stay tuned, we are going to announce a big partnership with a great department store in all over Europe with UPI. And I know that Indians are fond of this kind of shopping because it's bargain shopping. I can tell it's all the B-sister group, so La Vallée Village and so on. So if you want to make big and good purchase in Europe, go in Europe and use UPI. So, of course, we are PSP. We are based in India. We are 150 people in India since 18 years. The company is a French company, and we are operating in Europe and in South America. Thanks.
Hi, I'm Kevin from Malaysia, and Malaysia is equally a nice place as France. Please visit Malaysia after visiting Europe. So I'm from Razorpay, and we have a business in Malaysia under the brand of Razorpay Curlec. We have been in Malaysia for the past 3 years, and we are looking forward to one day to work with NIPL, to also enable UPI one day in Malaysia. And I've been in the industry for approximately about 20 years. So looking forward to share with you more on what's happening in terms of the payment business in Southeast Asia, Malaysia, Philippines, Thailand, and visit Malaysia one day. Thank you.
Good morning, everyone. My name is Lisa. I'm the global CRO of Pay10. Originally from Sweden, but based in Dubai, where we have our headquarters. So Payton is a regulated fintech with operations in India, UAE, Bahrain, Morocco, and additional markets to be coming soon. In India, we primarily provide payment gateway services, and in the UAE and the rest of GCC, a consumer wallet as well as a merchant wallet. So a two-sided wallet, if you'd like to look at it that way. Yeah, originally from Sweden, and a coolcation place to go if you like fresh air and coolness.
Hello everyone, it's great to be here. I'm Jayant Kulkarni. I run merchant services business for HSBC and based out of Hong Kong. And since everyone is talking about, quick introduction about what they do, and people might be surprised saying merchant services and what HSBC is doing, I never heard about it. So let me elaborate what we do there. So HSBC gotten into our own digital acquiring in Hong Kong, and soon, meaning very, very soon, we'll be launching in India and Singapore. We'll be announcing that later today. And we also have a partnership-based solution called OmniCollect, which is live in 17 markets, and 18 market will be live in a few weeks' time as well. So we have merchant services encompassing our own acquiring stack, plus the partnership solution that we work with a lot of PSPs. Thanks.
Thank you so much. I think we all have shared the business models, I guess, because I can see all the Indian audience here. Let me tell you one thing. In India, payments is a no-margin business. It's not even low margin. It's a no-margin business. And they all have come here to listen to maybe what is in there for them in the global markets. Because today I hear every payment companies moving out of India, setting up their base in Dubai, in Singapore, in Malaysia, in Europe, to kind of make some money. So yeah, I would like to hear in terms of, and bad that the previous panel was on alternative payments. We can talk about innovation in the end, but I would want to get into the business model side and the regulation side. I think that's the critical part, no matter how many fintechs would want to innovate, but I think the regulators come and tell you where you should stop. So yeah, I mean, maybe, being a Rails, being a, Switch, how do you see India as a market and the other global markets in terms of merchant payments, in terms of business models, in terms of regulation, how open or closed the regulations are?
Okay, I would say that for payments, it's a fabulous market, 20 billion of payment with UPI in August. So if you look just at this number, it's a huge market. But of course, as you said, Arti, it's free for the merchant, it's free for the buyer. So as Lyra, for example, is a regulated company from RBI. So we have to be compliant for the KYCs. We have to put fraud detection and so on. So how do you win money? And this is the biggest challenge in India. So UPI is really great for India because thanks to UPI, when UPI has done that, GST, tax, has done the same thing. So the state, India, is winning money thanks to UPI. But for fintech, and on another way banks, but more for fintech, like us, it's very difficult to win money. And this is a problem in a way because everybody wants to limit the fraud, to be compliant and so on. But all this stuff require money. And for example, there is a regulation in India. We had to put all our data servers in India. So this is the only country in the world where we have our data servers in India, and this is costing money. So how do we get this money if it is free for everybody?
So how is it different from the global markets, Christophe?
So on global market, of course, in most of the market, it is free for the buyer, but not free for the merchant. And for the banks, you have on cards an interchange, so they win when they are issuing cards. And but even for QR, for example, with Wero, it won't be free for the merchant. It will be less than card. Wero is a QR-based technology in Europe, but it won't be free for the merchant because everybody has to win some money. And the cost in Europe is not that much. It's less than in the US where it's 2 or 3%. In Europe, when you go and see a PSP, it is less than 1%. But we need that to make work the economy. In India, all the fintech are losing money.
Yeah, so Kevin, do you think that Curlec can be a money-making machine for Razorpay in India?
Well, I think if you look at how the payment business is in Southeast Asia, it's equally competitive compared to India. If you look at, say, Malaysia, for example, interchange for domestic transaction is capped by central bank. Thailand as well, but Singapore is not capped. So different countries have got different regulation. And there's also many fintech companies as well that have gone into this payment business, so to speak, thinking that it's a sexy industry, right? Because of digitalization, digital economy, everyone wants to get into the payment business. Even the small little guys, that's the perception that has been developed over many years, whether good or bad, So for a fintech company, hence for a payment company or a fintech company to survive, it's challenging, And I always say this: it's a marathon. It's not a sprint, where you need to go through a journey, whether it's 5 years, 10 years, you need to invest. And you need to ensure that you have got the perseverance, the determination. And of course, you need to be able to buy a good product, which I'm personally very fortunate because part of Razorpay Group, and we have got a scale in India that, used by many people, and we have got big enterprise merchants and whatnot. So from an international market out of India, we were fortunate because we have got the scale that is from India. A lot of stack that's built, innovation that's built in India, that's now exported out of international. Hence, it's something that, that I'm very proud of, because of the scale, you see, you have innovation. And when I look at companies that is domestic payment companies in Southeast Asia, there's always lack in terms of innovation. Why? Again, because of scale. Without scale, you won't have new products. Without scale, you won't have innovation. So hence, part of the whole Razorpay strategy is that to look at how can we export our expertise. And of course, starting from Malaysia being one of the few international markets and going to other countries as well. Having said all this, it's still a very competitive market, but merchants always hungry for better technology. Merchants are always looking for better tech, seamless journey, better payment flow. I think that's what merchant and users are always looking at. Hence, I look at, that there is still that opportunity in the midst of competition, etc., but there's still opportunity. Hence, I see there's still more exciting things can be done. Yeah.
Great. So we can, I think Razorpay, along with the industry, would hope that some money should come from the Malaysian market. And
we are working hard towards that.
So Lisa, from you, Pay10 is one Indian company set up base in Dubai and other global markets. And we are seeing similar, strategies of most payments companies in India. So how do you see that, the shift or the change you see in India? Of course, you have your own anecdotes to share in India in terms of payments. And, when you compare it with the global markets, and do you think there is a good business to be made out of those markets? I'm sure many potential companies out here would be looking those markets as a potential markets for them.
No, but I think building on what Kevin said about like in India, there's such scale. So you have scale and speed.
We have scale, but we don't have money.
No, you have the volume. So think about it. You train with the best, you perform. You have success rates above 90%, which is unheard of even in more developed markets. So you take that platform and you replicate it and you bring it to other markets. In those markets, I think the regulators have realized that you need to be able to charge for the services that you're providing. You're putting investments in there, there's regulation, there's compliance, there's fraud management, there's a lot of expectations on you as a fintech. So if you cannot charge for it, I mean, at the end of the day, there's not going to be any free lunch for anyone. It's going to be a race to the bottom unless you are able to charge for it. So this is the whole thing. We're like learning from what we've done in India, also seeing the uptake in local payment methods, seeing the uptake of QR, and seeing how rapidly it helps the merchants and the consumers, then bringing that to the Middle East. Like currently the interchange in UAE, like probably 2.5% on average. So there's obviously a big margin. You lower it by half, you're still doing a good job. And so there's a great opportunity, A, to drive cash conversion using QR codes, but also driving costs down for the merchants. There's not one merchant that doesn't want to reduce costs, and they can reduce costs day one. But then to keep on adding more, but then also looking at what kind of value-added services can we give to the merchants? Can we do instant settlement? Can we help them on recon? Can we help them on fraud management? So that to make sure that you're the relevant partner for them, so they don't go somewhere else. And of course, building credibility by also being licensed. Yes, we're a fintech, but we have all the different licenses that is required. And also then, leveraging the domestic scheme, the open banking regime, so we can work closely with other partners, because at the end of the day, like we talked before, it's like an ecosystem play. You need everyone to work together. Yeah. So we're really actually excited of taking that business model from India to the UAE, to Bahrain, to Morocco, and so on. And I think one thing that we've also, realized that as we build out these customer wallets across this region, that coming back to like domestic payments works very well domestically. They don't work anywhere else. Like yesterday, we went to a restaurant, we couldn't pay hardly because A, we didn't have a physical card, B, the amount was too high for what limits
have. That's the theme of the panel, by the way, today.
Yeah. So it's like how, so our vision is also to create interoperability between all our different markets where we will launch. So you have one wallet that works across borders.
Jen, for you, I mean, banks are always taken care of. They know how to survive, I think it's only the fintechs who face that.
The banks make a lot of money from the fintechs.
By the way, all the panelists here, banks have to undergo a lot of regulation, governance. These guys are agile, nimble, very fast to market, right? So we have, as a bank, a lot of governance and regulations to follow. And that's why merchant trust.
So what challenges do you see? I have a different question for you. But what challenges do you see in global commerce that we are seeing today? And, the merchant payments, making it more relevant, more seamless for those markets. As a bank, how do you see that?
Yeah, see, let me touch upon this from a merchant context, right? So today, merchants are facing a lot of challenges with respect to, there's a huge competition that they're facing. And there are a lot of new entrants in the market competing against them, trying to innovate things, right? So they have to be constantly on edge, ensure that they have a most relevant product which can be used by the consumers. At the same time, they need to offer the simplified or a frictionless checkout experience. So that's, again, a dilemma from a merchant standpoint, whether they should focus on the profitability, growth. Also, given that there is a lot of, the local markets, they've exhausted all the avenues. Now they're looking to go international, and that's where, banks like us help them to provide them by providing them consistent, standardized, frictionless checkout and experience, right? So those are the challenges that we've seen from a merchant standpoint. Again, we in Hong Kong ran a survey for our merchants, right? So where we invited about 150 plus merchants across the spectrum. And the theme that came out was really interesting. So what really merchant wants, I will just call out maybe the top 4 themes. So the first was high availability, the stable tech stack, and high auth rates, etc. So everyone would have thought pricing could be the first theme, but what merchants are really worried about, that how can they really sell more? Because if the platform is not high available, it does not have high auth rate, it's actually impacting their top line directly, right? So from that perspective, a lot of focus is given on stability from merchant perspective. The second area is on innovation, and to your point, right? How can they offer the whole gamut of payments, local payments that are more available in that market. So there are a lot of providers today who offer the width. They cover a lot of markets, but they don't cover the depth of payment methods in the market. And I'll tell you why the local payments are so important today is because there's been a lot of studies that consumers are used to use the local payment method. If they see that, it builds a trust, the extra confidence on the merchant. And also, since they know the steps, there's a less cart abandonment or the declines, etc. Study shows that there's been 10% more high auth rates if any provider provides a local payment method as opposed to the traditional payment methods. So all those very key from a merchant standpoint. The third aspect on pricing, that's where we've been discussing the earlier point. The margins are becoming very thinner. How can they, offer the better rates? And that's where the real-time payment rails comes into the picture. They are priced less as compared to traditional card rails. Right, and here there's a different story. We heard about it from Christopher, but I think how they can offer real-time payments on the checkout, that's another constant ask from the merchant. And the last point is around the whole counterparty risk. We've seen some events happening globally, so that's specifically for the enterprise merchants, and also the cybersecurity is top of the agenda as well.
Before getting into innovation and one more question, I really would want to pick this. I don't know. I'm sure audience would be interested and would be as curious as I am. Do you think that in the global markets, regulation and governments might take some inspiration? Everybody is taking inspiration, from UPI, the global markets, and innovation. But do you think they might take inspiration from just making it low margin business and just cutting down the cost, the margins and all? That, okay, if there is no MDR in India, we also follow the same footsteps. Do you think, just hypothetical question in my head. Do you see that coming?
So I think, my view is that definitely not from a commercial perspective, but I think from a product innovation. We work with the local switch, which is PayNet, which is the equivalent of MPCI. Even when we talk to the switch in Thailand, which is ITMX, they all have very respectful view of MPCI because of the product that was developed, which is UPI. Again, because I think because of the scale that is, that is in India, because of the usage, there's a lot of products being developed surround UPI, And also there are a lot of companies that are also producing products surrounding UPI as well, whether it's Razorpay or any other payment companies in India. So I think, so hence, because of that, there's a lot of, learnings as well. Even when I talk to, say, PayNet, for example, they always, because Razorpay is from India, so they always ask us, what are the new innovations, and even, a couple of months back, we did a sharing with PayNet in terms of what we are doing and what we are learning from the India landscape as well, and what is MPCI doing, about UPI and the other stuff about what's coming forth. So I think to answer to your question is definitely not from a commercial perspective, but from a product innovation and what's coming forth, you know. And just adding on to that a little bit is that many years ago, you know, people learn about how Alipay is from China, you know, again, the innovation, you know. And I think now it has gone into a next evolution of then learning what's coming from India now. So I think that's my perspective when I speak to the local switch or network. Yeah.
Yes, to answer to your point, Arti, I would say, like Kevin, that regulation anyway is a good thing because as a player in payment, we have to fight against fraud, we have to fight against laundering and so on. So regulation is making us move towards a better service, a more compliant service, and so on. So the only way, like fintech for us, is to innovate, to provide a new service, as we are doing in Lyra, and also to be always on, because this is a major thing for fintech, to provide the service, whatever the peaks are, all the day. And with this experience, for example, with Lyra, we are also selling our technological stack to banks. So in fact, we are working with banks. Sometimes we are selling on our own. Sometimes we are selling our technical stack to banks, because to make money, you need a huge volume. This is the only way for fintech to win money. And this is the aim that we have in Lyra, to make huge volume, to be able to do some money and to innovate. And this is the only way. And today, in India, we are one of the only fintech to win money.
Yeah, sure.
I think just building on that, because we talk about the regulator as someone that's sort of hindering from doing things, but I think also we need to look at the regulators as an enabler. And given what RBI has done on this payment aggregator cross-border license, it's extremely unique. I don't know any other market that has this.
Yeah.
And obviously that's creating, yes, you know, it allows companies outside of India to sell locally using the domestic payment methods that are so crucial for this markets, because there's preference, there's trust, and there's just habit. And then obviously if you can, but then there's also services around that that you can then start charging for. So yes, there are things that are very cheap and very sort of regulated, and then, but the regulator also works on enabling new use cases that can drive revenue for the fintechs.
Sure.
I would love to add one point on this as well to your question, right? I think this needs to be depend on the market practice, the culture, the market dynamics, right? So for example, any, say, Singapore, or for example, any other market, developed market, they may not have the challenges, right? The low margin that the businesses are making. Imagine in India, if a shopkeeper is actually selling product on a very low margin, if they suddenly charge payment fee, okay, then that is also another challenge. So I think this needs to be looked at from a context of the market behavior, and I think UPI has done a great job in bringing a lot of people under the umbrella of digital banking. They're experiencing the digital ease of making payments digitally. So I think that there needs to be a balance in terms of what level the market can really go in terms of pricing.
Payments is all about collaboration, you know, among fintechs, regulation, banks. As a bank, just quick one line, I think we are running short on time. So, but yeah, as a bank, how do you see collaboration, you know, with fintechs, just, you know?
So we believe the collaboration in a fast evolving ecosystem today, everyone can coexist, right? The fintech, banks, and actually create more sophisticated, more simplified and innovative solution for the end merchants. So we at HSBC, we believe that collaboration is a key for our success. and we can leverage product and services in much more faster pace as opposed to we have to build it. Okay, because we know the fintechs are nimble, they're agile, and they can build a solution fast. And I can give 4 examples where we are putting this in practice as well as a firm, right? So one that, as I mentioned, that we'll be launching our self-acquiring solution, digital merchant service. It's been built by Indian fintech. We are using their stack and we're taking it globally. We are also working with AI-powered fraud management tool. Of course, if we had to build it would have taken a long time, but it's quick. We're able to onboard them. And the acquiring stack, we're able to build it in 8 months' time. Okay, that's much faster pace as because we're working with fintech. OmniCollect, I called about. We're working with 17 markets, working with 25 plus payment service providers. Some of them are really the global leaders, some of the local strong players, right? So partnership with fintech isn't giving a control to them as a bank perspective. I think it's a win-win for all, including the banks, the fintechs, and most importantly, our merchants.
Lisa, what do you expect from a bank? What kind of support do you need from him?
Agility. No, but I think as part of open banking, we obviously need to, we are working together, and there is an important backbone when it comes to the core services, the compliance, the settlement, and so forth. So we cannot scale without working closely with the banks. I think that's a key.
Is there a world out there that you can succeed without a bank in payments?
No, I think
in Malaysia?
No, I don't think so. What I've noticed, there's 2 parts. One is, I think the bank has also changed a lot over the past few years. Traditionally, again, I'm not sure about the banks here, but if I look at least in Malaysia or Singapore or Philippines or Thailand, traditionally the banks has always had this mindset to say that I want to do it all by myself. I don't need partners, because I'm a bank. I've got everything, So that's how the bank mindset is. If you talk about probably 8 years back, 7, 8 years back, But I think that has changed because of how, digitalization, cashless payments, and you have got your Chinese e-wallets, cross-border e-wallets, domestic e-wallets, and whatnot. So that has also changed the mindset of the banks, where banks started to look at collaboration, partnerships, So that's the first change, I would say, in terms of the mindset. Then that comes in a recent 3 to 4 years ago, where there's a lot of digital banks have came into the region. You have got the Grab Bank, for example. You have got the Boost Bank, the local digital banks. And then now what I've seen is that now the banks have again started to evolve as well, to think that, hey, now I think I can do some of this stuff myself, And then I look at banks have started to be more agile, and what Jayant have spoken about HSBC, and that's one of the things that I've seen how HSBC have evolved, because I personally have worked with HSBC for the past 10 years, and that's how the banks have evolved. And then that leads to then competition, right? So definitely it's going to be a competitive, market, but banks have started to evolve over the last few years. And yes, partnership, but I think there's going to be one point of time where it's going to be a gray area where, you may hate me of saying this, but I think banks would then say that I'm competitive enough, I'm agile enough, to then compete together. I think there will be a point, maybe it's gonna be the next 2 to 3 years, I don't know, But I think that's what I could probably see if I have a crystal ball with me.
I really want to touch upon that innovation part in the end. Please make it quick. Christophe, as a rail, as a switch, what kind of support do you need from a bank or from regulators? What collaboration for you is key?
I would say that on our side, as a switch, for example, we are providing our switch to many banks. We are providing our payment gateway on a white label to many banks. So on our side, we are really working closely with banks because, as I was saying before, payment business is a business of volume. And for a bank, for example, for a payment gateway, it's a lot of investment for a bank to have its own payment gateway. Of course, they're going to make some transaction, but you need much more transaction to try to win money. And because of this volume business on our side, we have decided to bring our technologies to banks. So on our side, this is not the case of all the fintech, but we are working closely with bank as a partner.
Quickly, UPI as a real-time payments is a benchmark, I would say, for the global, the payments world. What are the alternatives that we see in terms of, which we can compare, or UPI going international? We have seen UPI going international. So how do you see that? I mean, do you see any alternative in the markets like, SEA, Middle East, Europe? Quick, maybe one-line answers.
Should I start?
Yeah, please do.
Okay, when we brought UPI in France, our major concern was the acceptance. Not that many on e-commerce, but mostly on in-store. Because in France, we are a card, and in Europe, a card-based market. And to make live cards, we have enabled NFC technologies and wallets like Apple Pay, which is based on card. And when we came with the UPI payment method, our main challenge was to display the QR code. And in Europe, it's always the merchant which is initiating the payment. So that means that a dynamic QR code was needed. And it is quite a challenge because on POS, normally, nothing has been done to be able to display a dynamic QR code. So it has been a great challenge, for example, in Galeries Lafayette, for displaying the QR code. But in a way, it's a good thing because there are more and more QR payment methods from foreign schemes which are arriving in Europe. And even there is one new payment method, which is called Wero, which is arriving in Europe, which is QR-based. So in a way, UPI, the acceptance of UPI has enabled us to be the first to be able to display a dynamic QR code in shops. Because Wero will come in shops in 1 or 2 years. So thanks to UPI, we have started to work on how to display a QR code on shops. So you can see that some payment methods done in a part of the world, in India, can make move the technology in Europe.
Great. Kevin, quick, please.
I think definitely more marketing, more awareness outside of India. And also I think outside of India, the word UPI, sometimes there's a lot of confusion to some key merchants. They always refer, UPI outside of India can also mean UnionPay International, which is China UnionPay, So sometimes there's always that confusion, especially. So I think there's definitely some marketing, some awareness required. Because if not, when I talk about UPI, people would think that, UPI, is it from China or which one? You see? So I think marketing, definitely there's more...
NPCI would hate that.
So more marketing required, and more awareness as well, yeah.
And it's funny that you say this, Christophe, about that it's difficult to get the merchants to actually switch from one POS to another. So having that insight, we have in the markets that we're launching, we're actually going with our own dynamic QR code just to get scale and not to be dependent on other partners so we can grow faster. And then and then also making sure that it's interoperable, like with the domestic scheme in the UAE, as well as the rest of the domestic schemes in GCC and UPI. So you have that experience that people are used to coming from India, and UAE obviously has a large population of Indians as well, and then being able to accept at the point of the merchant.
So basically, real-time payments is, in the end, is QR-based payments that is going global, is it?
I mean, it can be QR, but it can also be like a checkout online that it's not QR based, but you've linked your bank account, and it could also be a real, like pay by bank use case.
I think that is going to fuel a lot of global commerce, what Lisa mentioned. The foundation is set today. I think the more linkages that it creates, it will create more opportunity for global commerce, for the merchants and also for consumers to pay using these. I can see that happening. UPI is connected to 6 markets. I can see similarly the FPX and, which is the Hong Kong's real-time payment rails and PromptPay Thailand real-time payments that are connected. Whenever I go to Thailand, I can use that, right, for seamless payment to the local provider there. So I think that's a new way of innovation that I see will happen, and that will ease a lot of the global commerce, right, for the merchants as well as for the consumers.
Sure. Thank you so much to all of you. I hope it was a panel worth listening to, because I'm sure that you, by now, you know that you can make money in Dubai, 2.5%. Is that what I heard, right? Margins.
Just
so
in
it's
that
great
change.
margins. so yeah.
Only in Dubai.
Everybody maybe set up shops in Dubai and Malaysia and Singapore. I'm sure a lot of payments companies are already going there. And in innovation, I think QR is the end goal for everybody. Yeah, that's 2 key takeaways, I think, for the audience today. And I'm sorry I could not take any of your questions, because everybody were really, really... But I just hope you all enjoy the session, and thank you so much for listening to us.
Thank you so much. I would request our panelists to please rise for a group photo in front of the tables, please. Ladies and gentlemen, this concludes our session. It has been an enlightening experience engaging on conversation with all of you.